All right, so the start of a new week, the end of what turned out to be an extremely bad week for Bitcoin. Last time I did a video, I believe we had broke this, and I said until we really broke this, I wasn't going to be bearish, and I essentially turned out bearish. I did a follow up video. I know I did it that morning, um, and then I did a follow up video later in the afternoon. We pretty much hit the target of this channel. I'm keeping this channel here because I still do believe we'll get enough price rally to where we'll retest this channel. There's a lot of metrics that they're pretty much to the max. The stock to flow model, that is pretty much this one doesn't have the errors. So like it's stock the way that the bands work, the stock to flow bands, and I wish this showed it, but the way the stock to flow bands is whatever the stock to flow is, it's that times two. So 56,000 times two, and then the minimum is divided by two. So essentially, the model right now is saying 57,000. So divide that by two. So that's the bottom of the stock to flow kind of channel. It's not shown here, but about 28,000, say 29,000. How does that? I think that cross. Yeah, it doesn't work for that doesn't work for the cross asset one. Just a regular basic one. And this one actually has 365, so it's a little bit different. I do know that it's more around like 30,000. So right now we're definitely testing the absolute, minimum, or the absolute like bottom of the stock to flow kind of channels. So we'll keep an eye on that. Do I think this is going to break? No. So do I think that we're at the bottom? Potentially we are. A lot of the price movement. So earlier in the week, they had a bunch of FUD come out, but towards the end, it was China was going to ban or make Bitcoin illegal. What they were, and in that article, which was very unclear, but the way the media ran it was that this was something new, but China has banned Bitcoin basically every year, once a year since 2013. It's like, you know, a lot of the things in the space is like, oh, China controls Bitcoin. China's going to ban Bitcoin. It's a contradictory statement. So, actually, there's a Bitcoiner who's been in the space for a pretty long time. His name's Nick Carter, and following him and seeing what he's posted on his Twitter and then confirming it, there's a lot of hash rate that's moving out of China and relocating. So, for the past couple of days, a lot of that has been pressure to sell in the market. And you can see here, this is the hash rate, and you can see that the hash rate pretty much peaked on the 12th, and that was the day where Elon came out and talked about how Bitcoin uh, was not green and it was dirty and it used a lot of coal. And I mean, he's still learning. A lot of people give him credit because of what he's done, but I mean, you can't be an expert in everything. So you can see that the hash rate has fallen off, and there's always a debate: does price follow hash rate, or does hash rate follow price? And I think they're kind of hand in hand. So if price goes up, more hash rate comes online because more people want to mine to make a profit. Price goes down, hash rate comes offline. So, but does hash rate go down and price go down? Like I said, it seems like they're kind of tied together. So hash rate has come down. It's caused miners to sell, and I think the relationship there is that if hash rate's going down, it's because miners are exiting, and some of them will take their profits, so they sell, and so is this good for Bitcoin? Yeah, I mean it's going to decentralize more of the hash rate outside of China, which is good. So is this permanent? No, nothing's changed. Miners still want to mine Bitcoin. Uh, yeah, it's gone down a little bit. They're going to have to be a little bit more efficient. Are they going to be able to get access to cheap power again? I mean, we'll find out. But I do think this is going to take a couple of months. I talked about it the last time. I think it's going to take, it could take 3 to 4 months to get back. And is this the bottom? I mean, there's nothing here. The only thing that's kind of supporting this is Fibonacci levels. We're pretty much below this one. Could we get back? I mean, we've tested the 50, right? We can look at our moving averages. They've gone down. Oh, I want to go on the weekly though. Yeah, okay. So I also wanted to say that in March, I had posted something and I tagged it right to the top of my profile, was that on a weekly closing basis, 40K so long. I had made one on the 28th at 30K was gone. I based this off of previous data that once we closed the monthly above 2 times the previous all-time high, it never even wicked below that. And that was based off of 2017 data. 2013, come to find out, it did do that, but I thought the market was a little bit more mature. We weren't going to get these larger price swings. Didn't happen. I was wrong there. You learn from it. Do I still think this 30 will hold? I believe it will. I think the majority of the miners who have been relocating their hash rate outside, I think the majority of those have probably already sold in order to have the funds to move, that mining somewhere else. Or maybe they don't. Maybe they don't. So maybe some don't enter the market, but new miners will come online. There could be, that mining hardware is going to be up for sale. It could be up for sale cheap, especially if it's being liquidated. So we'll see. We had this 6. This 6 could be the low. We'll see what happens on the 8 and the 9. So in the past couple of days, though, the way things were developing, there was certain times where the market was going long, and I was like, oh man, I didn't really like it. So here, that was the initial sell-off on the 19th. And then we started to bounce, and then the market kind of started to maybe get a little bit more confidence that we were going to go back up. And I was a little bit cautious here because we had this 9. I would have liked to maybe spend a little bit more time here, and I did say I think we would mosey on sideways, and I had mentioned that that 40,000 on a weekly close. I said that kind of went against what I thought was going to happen, that we would go sideways for the remaining week and maybe the next couple of weeks. But I was fine with that, and that's exactly what happened. Or that's exactly what's happening. So we got the 1. We didn't retest it with a green number. We did here. We went up, and then we've closed below this 9. That right there should have told you, if you're just trading TD sequential, that's bearish. I mean, here's bearish too. It did find support. You can look at the CMF and see if that actually showed buyers coming in right here, and it did a little bit. And then it started to fade out again. But we did get the retest here of this level. We broke below it again. And here, we're not really seeing any support on the CMF. We did a little bit here, but now it's starting to fade again. But the market as a whole is net short. Same thing on the weekly. I mean, this is trending down. I mean, this has all of the workings of the start of a bear cycle, but can this be, I mean, we fell 53%. Is this going to be a prolonged bear cycle given the circumstances? I'm not sure, but I can tell you right now, this is what do I think we're going to have a prolonged bear cycle like we did from 2017, and then 2018 was bearish. 2019 we kind of picked up a little bit. They had that one coin scam, and then we faded out, hit Corona. Is it going to be like 2013 where it topped, and then 14, 15 was bear cycles? I mean, was all part of that bear cycle, and then it started to recover in 16. We'll find out. But I do think this is short-lived as far as mining hash rate going down. I know a lot of the alts got, smoked pretty bad. But right here, I mean, we're not seeing really much support on the CMF. The market is going net short on the daily. On the daily, it looks much better. So you can see that we're getting this bullish divergence. Market's net short, which is good as far as counter trading that. So we're on a 6. I mean, could these be the lows? Yeah, but I would have loved to see this wick down on a 6. I'm saying a 6, but you can't see it because this T sequential is a little bit more cleaned up. It doesn't. So right there, there's a 6 right there. So you didn't see that, but I would have liked to see this wick on this candle, but it doesn't. This doesn't always have to perfectly trade that way. I mean, we can still get the 8 and the 9, trend as low as one of these. As long as the 8 and the 9 is as low as the 6, that's okay. So if the 6 ends up just being this low, that's fine. Yeah, okay. The low came in at a 1, but this is also extended very much. You can look at the RSI and see how oversold it is. So, I mean, look at that. And then you're also getting bullish divergence there. On the weekly, it's come down so much. The monthly, in a bull cycle, I can say that it's never gone this low. Even in 2013, whenever they had that little, intermediate cycle, this is the pullback here in mid 2013. It went to 69. It's never been this low. This month, if it continues the way it is, will probably end as one of the worst. I mean, this was a bad month right here, November 2018. That's whenever price fell. That's whenever they had minor capitulation. Could this be a mini minor capitulation based on what all the, uncertainty that's going on? Yeah, it definitely can be. But if it closes the way it is now, this will be probably one of the worst months in Bitcoin's history. Let's see. I mean, even here, it went back to 27%. This one was 36%. Yeah, it's going to be one of the worst months in Bitcoin's history ever. So, man, if you can, survive this, I'm not going to say survive, but if you can pull through this, you would have lived through one of the worst months. So, you always talk about HODL and having diamond hands. This is going to basically, if you mitigated your risk properly, and you believe in this asset that it's going to change the world and become a big financial asset. It's a store of value, which I think it is, and it's going to preserve your wealth as it goes on. This month it's one of the worst months in Bitcoin, definitely one of the top 5. And in the way it's trending here, this RSI has closed down even from here, 2016, that whole 2017 run on a monthly, the RSI never closed below 70. Here, it did a little bit, but that's like an 80% drawdown here in this bull cycle of 2013, and this mini pause that they had. Yeah, it was like let me hide this. It's like an 80% drawdown. Yeah, this isn't an 80% drawdown, but I mean, as far as the month goes, 60 right here, 75% drawdown. We didn't get that, but like I said, all this has the workings of what you would see in the start of a bear cycle. So be mindful. There's always a saying: don't risk more than what you can afford to lose. This is the market that Bitcoin is. Everyone loves to hear and see the, invested so much and made so much, made tens of thousands or hundreds of thousands of dollars. But this market is no joke. It'll definitely humble you if you don't stay on top of it. So here, as far as this strategy goes, this 3MA. If you get right here, if you get this 3 closing below this 30, and we close the week below this 6, below 30,000, then you would be 100% out of your position, which you would have entered in 100%, somewhere around, say, 11 or 12,000. So your return, if you would wait and it did close below this, would be 160%. So 2x, almost 3x your money. Like I said, this is uncharacteristic of the middle of a cycle, of the middle of a bull cycle. But we'll see how it pans out. You would take your money off the table. Yeah, you didn't get the 5x, 400%. But you could have also mitigated your risk and come up with a strategy that would have been more aggressive as far as the exits. But what I'm telling you right now is what I've ran over the past 2 cycles, and this cycle is definitely different. It's like a mesh of 2017 and 2013. with a large amount of FUD and just within these 2 weeks. It's like one article after the other article, and I think it might have made, new institutional money that came in that was maybe a little bit uncertain because, you know, a lot of these guys came in say around 10,000, uh, and they had, what would have been if they would have came in around, say where they would have came in around 20,000, they would have been at 2x, maybe some a little early 3x their money, and that stuff's not common like in traditional institutional investing, unless you're trading some sort of option strategy or you have some sort of leverage. Like that's not common. So if you had institutions come in and they saw those types of returns in such a short amount of time, basically about 6 to 8 months, um, they probably took their profits. Uh, so yeah, we'll be mindful of that. We can look at the Mayer multiple bands. This lower level limit is at 22,000. That'd be severely oversold. Can we get there? I think we're gonna bounce. We just had too many. I mean, it was a large sell off for basically 2 weeks, right? Almost basically 50% in 2 weeks. Is there some support coming in on the CMF? Unfortunately, not. On the weekly there isn't, but on the daily there is. So we retested this area here. The next area of right here. I don't know why I didn't delete. So right there, we got there. So that's taken care of and gone. The next level is on the daily here at 38,000, right around 38,000. Are we going to have enough momentum to get there? Let's look at, so the CMF says we could, RSI says yes we can. Bitcoin doesn't stay oversold like this for a very long time, so we could get some momentum over the next week. There is still macro to think of as far as globally what's going on. Inflation is definitely starting to develop in different parts of the market. So Bitcoin inflation hedge, I think I think buyers are. I mean, it's still an inflation hedge. It's a limited amount. Fundamentals haven't changed. So CMF looks okay. The on balance volume, what does that look like? That's flattened out again. It's still not. I mean, it's there's definitely a channel here within this. This hasn't broke, but if it does break, I think we'll get another red week, another down week on the daily. Yeah, on the daily, it's pretty much broken. I'm going to use the weekly. On the 4 hour, showing a little bit of strength, but not really much. We can look at, so RSI I did already. Yeah, so that's pretty much it. We can look at the Ichimoku cloud, see what that looks like. We've broken through it. This retesting this area over the next month, coming back into this cross, this 46,000, retesting this breakout area. Maybe we put a date there around the 17th. So what is that? Another 2 weeks, 3 weeks? What would that be? About 3 weeks, 3.5 weeks. We could come back into this cross, but we're gonna have to see some good momentum coming in. The CMF was trending up. We're the market's getting net short. I would have liked for this to close above, this white trend line, but it hasn't. So we'll see. Like I said, this is kind of pretty much, this is still pretty bearish. Getting some volatility back, getting wicks down to 30,000. I'm not going to say it's not going to be uncommon. We could basically range between this 31.5 and 38,000 for the next, I would say for the next 3 to 4 weeks. Maybe we come up a little bit to 38 this week. We'll see what happens. But this is definitely bearish, neutral at best, really not at best. This is definitely bearish, especially the way the price action's going. So this hash ribbon hasn't really seen the hash rate go down. The moving averages probably are definitely not even close to crossing, because that would be an entry. So yeah, I wish this was better news, but historically, if you're looking at this, this is all the signs of definitely signs that, hey, I mean, I don't want to say probably or it's high probability, but it's definitely signs that this could be the start of a little mini bear. But we could go sideways for the next 3 to 4 months. It would be very, very frustrating to see such a big drawdown and then maybe see some wicks back to 30,000 for people that are entering. But hey, you can look at this positively that because I don't think we hit the cycle top. You can look at this as positive that we have the next maybe possibly 3 to 4 months to get Bitcoin at a much lower price because here this model, this NVT model, is basically saying any Bitcoin below 55,000 is cheap Bitcoin. You can see it here when we had a dip. That was a good time to buy. This was a dip. This was a dip, but then we had an extended. I mean, even here, whenever it was the beginning of the bear cycle in 2018, you can see the NVT started to trend down, which said that this Bitcoin was still, you know, it wasn't necessarily overpriced, but it wasn't on sale. And then right here, it pretty much got on, close to on sale. You could have bought there, and then it went up, and then here in this COVID spike, that's on sale. Could have bought all through there, and then above 7,000, you could have stopped buying. But right now, it's basically telling us that, hey, Bitcoin's on sale, even though it might not feel like it is. These metrics, based on the transaction volume that's going on the network, it is on sale. So you can read more about the NVT here on this website, but Willy Whoop provides this data for free, NVT. So, the top's still saying 145. Stock to flow is still saying that we're, 100,000, but we could, it could hit that. This technically goes all the way out to, the next halving. So does it have to be this year? It could be early next year. It could be like February, March. And I did mention that we could be in the $100,000 range then. That'd be more than enough time for the market to reset, buyers to start to, build some more confidence in what's going on here. But if you look at this Mayer multiple band, as of right now, 22,000 would be the absolute bottom. So we wouldn't get quite to the previous all-time high. And that would be, that'd be a significant pullback. What would that be if we went all the way down there? 62, 65. But hey, like I said, that could be the normalcy now of market pullbacks. We had the 75 to 80% pullbacks last decade. Maybe we have 60 to 70% pullbacks this time. That wouldn't be out of line for a mid-cycle bear, because whenever it's all said and done, if Bitcoin does move on and hit those upper bounds of what's shown here, they're going to call this part of the cycle the mini bear, and they're going to compare it much likely to what's going on here. But this, with respect to price action, is kind of a little bit more aggressive than that. Maybe not. Because look, you had some wicks down here, and that took, June all the way basically to October. So 3 to 4 months to get back to where price had started to break out again aggressively. Technically price broke out here, but until it significantly broke out to a new high, that took about 3 or 4 months. So, but how long did it take to get back to the upper bound? It took a month. So could we be back till around 70,000 in a month? I don't know. I don't believe, especially with such a pullback. Do I think we can be back here to this upper bound in 3 to 4 in a month? If we get some big price action and some positive news, possibly. But I do think it'll take maybe 3 or 4 months to get back up to the previous highs. So I think that's about it. We can look at some other ones. I'll look at Cardano because that did get a lot of attention. This was the targets. It went as high as this Fibonacci here, 240. There was a retest right here on the weekly. It got that. No, it didn't get that. This was a big wick. It lost 43% in 1 week, but it wasn't enough to retest it with a red number. So I'm going to leave that on there. But I am going to say that this is basically your bottom, $1. So if that gives way, and I do say, once price goes above the previous all-time high, it's unlikely, based on the way I trade TD sequential, to ever come back down to these lower limits, but that's only with a couple of assets. I mean, I don't believe in a lot of these altcoins, so I'm going to say Cardano can go all the way back down to, 40 cents, 50 cents. Especially if we are entering a bear cycle, a mini bear, and we get some aggressive price movement. In bear cycles, Bitcoin tends to hold its value much better than the altcoins, because it's just a smaller market cap, and I mean, they have liquidity, but those sellers are much quicker to sell their alts than they are to sell Bitcoin. The holders are not as strong. So, yeah, I mean, this could technically go all the way back down to 40, 50 cents. But if I'm looking at this, I'm going to place it in the same category as Bitcoin. I mean, yeah, the weekly hasn't come down all the way, but this is an aggressive price movement, and the movement was aggressive up. So I'm going to use Bitcoin as my indicator for this whole market. Bitcoin goes down, the market goes down. The whole market goes down. It carries alts with it. This could, I'm going to say, if Bitcoin closes the prior week, if it closes this week below the prior week low, below 30,000, I would be out of all my alts. Ethereum could come back all the way here to 1400. It's definitely at a support area, and that if it breaks, I mean, it pretty much tested that all the way down here at 1700. If it definitely breaks this level, if you get a low that goes below this, so below, say, 1650, if it closes a week below 1650, it'll probably go all the way back down to 1400, its previous all-time high. So we'll see how that goes. I mean, I can pull up a CMF on that. That's not going to work. That doesn't look great. And it is getting some, oh, it got a 9. Look at that. So we could have a 1 to 4 candle correction, and then it could go back down because it didn't. It could go back down to 17. But so where could that go? That closed here. That could be somewhere around the upper end of this candle, so 2300, something like that. Reversal candle, retest, hourly. Let's look at our hourly on Bitcoin. Yeah, so it's finding resistance here. This needs to close above this hourly for us to maybe have a little bit more momentum. It's not looking great. Not looking good, not looking good. But we'll see. I mean, this is a reversal candle. It's just the beginning of the day. So a little early to call it, but we'll see what happens. But this is good momentum here. This is showing buyers are coming in. Let's look at silver, because that's another position that I talked about. Didn't close the week quite like I wanted last week, but still nothing changed. Everything still looks good. I'm using basic indicators on this. RSI's okay. Moving averages look great. We're on the upper end. This kind of shows a reversal candle, but eventually this will break out and we will reach our target, I think, for this channel at, 32, around 32. So I think silver still looks good. Gold probably also still looks good. It's on a 9. We could get 1 to 4 weeks of a pullback, but then this could also overshoot because this consolidated, closed, and then, I mean, this did come down. This line looked good. But then we did get some consolidation. So we could be on the upper end of a price rally that could maybe go sideways and a little bit down back to 1800 for gold. And then we would maybe see that for silver as well. So you might want to be mindful that we could see a pullback on silver, but probably no more than, I would say, back maybe $26, $25, something like 5 to maybe 8% or something like that. I do think silver is going to outperform gold, so, but on the drawdowns it's going to be larger. So if it does go to 1800, that would be like a 4% pullback. So you could see silver go 5 to 8%. So we could see that maybe over the next week or 4 weeks, but then we could see some good momentum. This breakout and then retest again this breakout. So I think silver looks good, but we do got to be mindful that we could be reaching upper end of a of a top just based off of gold, using that as your gauge. But if we get this week again closing above, say 27.92, I think we'll get a good rally. 28 will be some resistance like we saw here. But I think it might be enough to carry us for maybe within the next month to this upper high, and then maybe we get a pullback. But we'll see. The way I'm trading that, I'm gonna use my moving averages because I still think there's still some good movement in gold. But again, if my moving averages tell me something different, I can use gold and silver, look at them together, and then determine what's gonna how is this gonna go, because my moving average, if we get a weekly close above the prior week high, say we get it to 1900 and it closes, even though this is a 9, I think it'll be more of a 9 where we consolidate and then go higher, maybe make a run back at this all-time high. So we'll see. Like I said, trading's dynamic. It's definitely not static, and markets change every day. They change every week. Things happen all the time in the world, so you have to be mobile in your trading as well. So I think that's all I'm going to go over. I think I'll do Doge only because it had so much publicity, and if this is the end, or if this is the beginning of a bear, I want to go over it. And I do think, like I said, Doge is a meme. It definitely has 14 cents is my target, for sure. Below that, it can definitely go back all the way down to under 10 cents. So, yeah, and this is forming definitely like a cup and handle. So that drawdown would be tremendous. The last form of support is here at 20 cents, and below that you'll probably see a lot of people selling until it gets to 14. Maybe it consolidates and it could continue to trend down, because on the weekly, you're getting this sharp turn down. So anyway, so I think that's it. Definitely went over my time, but I want to talk about a lot of things. So appreciate it, and thanks for watching.